Alright, so hey guys, welcome back to my channel Trading Nearby. In today's video we're gonna see our day 19. Now today is gonna be the day of our comeback because it's been a week since we've uploaded, and yesterday the day 18 I did upload a video about you could say about why did I not upload for a while, and I quit my job. So I explained why I quit my job, obviously to make more time for trading, and we've talked about how we're gonna go after. Now today what we're gonna do is we're just gonna do one last thing to learn. So today's the last thing that I'll be learning, and it is, when it comes to the 50 days journey, this is gonna be the last thing that I will be making, the last video of learning. It's basically a learning video. So with that said, let's see what I've learned. So this actually I have learned it day before yesterday, but the recording somehow did not come out to be proper. It was corrupted, so I had to do. I'll just let you just know what I've actually learned. So what I'm gonna do is I'm going to go into paper trading. So you can see these are some trades which I put just to see. But yeah, so before I've made 2 trades, and the 2 trades which I've done were these 2. So one of them I had a huge loss, and the second one I did have a profit. So well, that is it, as you can see. But what I'm gonna do is I'm gonna leave that aside and just focus on one thing, that is this. So let's start off by talking about what actually. So what I'm going to do is I'm going to tell you guys one thing. So let's say that I have an account, a trading account obviously, and I have, let me just go to this. All right, so let's say I have $100 on my account. All right, and I should start trading. Now I've learned everything about trading, and now it's time to put in real money into the market. Now how do I do that? Well, that could be done by using the trading panel. So there is one important thing which I've decided. So what I'm going to do is I'm going to open Notepad, or maybe I should open OneNote and try to explain. So I'm going to add a page. Let me just get my... Where was my... So I think I need to charge my stylus, which is a pain, such a pain. But all right. So while it's getting charged, I just started for 5 minutes. I'll just explain real quick. So if I have $100 on my account, I would just put in $10 as the risk. So if I win the trade, I would get the risk times the risk to reward ratio. So let's say the risk to reward ratio is 3. So I would be getting 3 times my risk, and if I lose, I'll just lose my risk. So if I put in $10 in the trade, if the risk reward ratio is 3, then I would lose $10 if I lose the trade. If I win the trade, I would get $30 added into my account. So well, yeah. So that's how it works. Let me quickly see if the charge is enough. Okay, yeah, the charge is enough for sure. Okay, so what I'm gonna do is right. So let's say that I have $100 on my account, and I'm gonna start trading with the $100. So there is something called as the risk percentage. So how much percentage of my account's worth am I willing to risk? So I would like to generally people keep it at 1% or 2% or so on. But what I would like to do is I would like to keep it at about 5%. Because if the account's value is about $10,000, then getting 1% of that, or maybe let's say 3% of that, would be 3 by 100 into 10,000. That would become $300. So if you have a huge account, You can have really less risk percentage, but for me, I would just like to keep it at 5%, because every trade I put in, let's say the risk reward ratio is 1:2. So if I put in $100, then if I make money, I would put $10 I would put $10 on the risk. So if I make money, if I get profited, I would add $20, and if I don't, I would get minus and plus. I would lose $10. Now, one important thing which I've learned is this. So let's say that there is a trade going on like that, and now, or let's just say there is a trade going on like this, and so I've taken a trade here with my stop loss around here and my take profit around here, and this is the box, and this is where we've actually taken the trade. And so the risk to reward ratio, let's say it is 1. Okay, let's just say it's 1, and I have $100 in my account initially. So I put in $10, so I make a risk of $10. All right, and so once I put in a trade, if I win the trade, my account balance. So you would say that if you win the trade, I would get $10. So how does it make sense? Because our $100, we are putting $10 on the risk. We're gonna have $90, and if we win the trade, we're gonna get $10, and we again come back to 100. How does that work? Well, that's not how trading works. The thing is, once we take a position based on the outcome, our money will be deducted or added. So if the risk is $10, once we win the trade, our account balance would be 100 plus 10. That is $110. Now, if we lose the trade, again, since the risk reward ratio is 1, we would lose how much we have actually put in, which is the risk amount. So our amount would be $100 minus the $10. That becomes $90. So that's how this works. But yeah, so that is a nice little thing, which I generally think a lot of people don't get it, who are beginners like me. And now as well, I'm much confident about my skills in trading, which comes to making trades and all that kind of stuff. So well, let's just continue, and let me just continue explaining what I've been explaining all this while. So if the risk percentage, once I decided it, let's say I have 100. Let's say if I have $10,000 and my risk percentage is 5%, then that would be a lot, because that would be $500. So the risk would be $500, which is a lot. So that is when people generally tend to keep about 1% or 2% of risk. Because of that, they would minimize the risk and maximize the profits, and have a really good chance at increasing their money exponentially. Now, what I'm going to do is, I shouldn't have erased it. Let me just leave it as it is. I'm going to go to TradingView and show you guys a quick example. So, let's say that I want to take a trade. I'm going to use replay trading. So let's see if we can use the paper trading panel with replay trading. So I'm going to choose, let's just say I choose bar. Let's say I come up to here. Uh-oh. Okay, I think I can't use replay trading, which is really sad. Oh no, I won't be able to use replay trading without my plan. Well, I think I can do this actually. Let me just make a quick example, because I've completed the plan. I don't have the premium plan anymore. So, okay, let's say I'm just doing normally. I'm just gonna trade as it is, and I'm gonna make a trade where my risk percentage. So, what is gonna be my risk percentage? So if I have 10, that means if I go to the risk, you see it's $10. Because okay, so let's say I wanna risk 5% of this. So I go to the risk percentage and put in the percentage, and that will automatically calculate the units for me. And if you go into the USD, you would see actually how much it is. So if let's say that I'm in this account. I'm in an account where I have this much balance. And so if I put in the risk percentage as 10, you see it is not $10. It is actually $9.52. That is because we are having the 10 percentage of the account which we have. So again, that is how it works. So let's say that I want to risk, and again, there's a formula to calculate this as well. So I don't exactly know. It's actually related to pips. So when I go to this tool around here, and if I use the calculator, so actually let's say we're taking a trade over here, and you see this is 103 pips. So there is actually some kind of a formula which uses this number of pips and all that to actually calculate the units, the number of units. That is the market size as well. A lot of people call it market size, units, and whatever you like to call it. It's the same thing. So let's say I have 10% or 5% of my account as the risk, and then obviously I have my take profit and stop loss. So the first thing I need to do is, let's say that I'm going to close this because it's annoying. I'm going to place a trade about, let's say, place a trade over here. So I'm going to use my where's the tool? I'm going to use, so here are two tools which are important. So there is the where was that? So the long and the short position. So the long position is where we're going to take a trade in the bullish market. That is, we're going to do a buy where the price is going to go up, and so we would take our profits above. So you see, this was like the best trade possible. So, well, what I would have done is, so if you see, if I take, there is a crossover right around here, and the price seems to go up. So I would take a trade about there as soon as that happens, and then we're gonna have our take profit at about the previous high, which seems to be this, and this. So depending upon your confidence and upon your risk, how much risk you're willing to take, there can be 3 take profits: 1, 2, and 3. So there are 3 take profits which you can hit, because you wouldn't know the price would actually go this quickly, this up, this high, which is insanely good. You see, if you have this, then you would have a really bad risk to reward ratio. But if you had this, you would have a risk to reward ratio of about 1.57. So if you put in $1, you would get $1.57. So again, if you put in $5, you would get 5 into 1.57. That is like, you can say 8.5 something near that. So, well, if you're way more confident and you want to take the risk, you might be like, it's just $5. I can get it really quickly. I can earn it really fast. So you can put a trade and put the market take profit all the way to here. So again, you can choose your type of order. Well, in the limits order, you see there is ticks as well. So this is something which is only for a limit order, because when the price is this and when the ticks are at this, so you see this is the ask, the bid price, and you choose the ticks. That is where you actually get into the trade. And again, the rest of the things are the same. But here, if you want to take a trade, again, let's say that we're taking a trade over here. So seems like there's going to be a market, there's going to be a crossover, but it also seems like the price is going to go down. So what I'm going to do is I'm going to take 2 trades. The first one, I'm going to have my take profit about there. Let's keep it high, and our stop loss a few pips below the low. So this has a risk reward ratio of 4.83. So what I'm going to do here is I'm going to take a trade right about here. So we're going to do the trade, and we get to the trade panel. So the first thing, you choose the risk percentage, and then you decide that you use the tool and decide the positions where you want to take the trade. So you just put your cursor exactly on this line, the green colored line there, and right click and copy the price, and you should put that in the price. So that's going to be our take profit, and our stop loss is going to be this price, that is the red colored line, and then you click on buy, and then the trade would be established. As you can see, this is the trade, and this is the stop loss and the take profit. And the one other thing which is really good is that you get to see how much you're gonna make or lose. So if you lose the trade, you would lose $5. If you win the trade, you would get $23.10 added to your account. So that's really important as well. And this is where you've taken your trade. This is where you bought the account. And so that is how you actually take a trade. Again, DOM is the real time the thing. So people also use this to take their trades. You see, these are the orders. This is where you can place your orders. This is the current price. This is like the real time data of how the price is flowing around. And you see, well, if you go to the paper trading panel, so let me hide the tool. So over here, you see there is this position. This is what I've taken. This is the trade which I've taken. And so this, so let's talk about each of these. So the symbol is the actual chart. So I'm using the ONDAS version because I'll be using ONDA as my broker. I'm using the USD JPY FOREX pair, currency pair. So I'm going to buy in USD and sell in Japanese yen. And the side is long. So it's a long trade, a long position where I'm just going to buy. It's a bullish. I estimate the price to go up. And so it's a bullish situation according to me and my analysis. So I would take a trade. And then we have our quantity. These are the MO number of, these are the units which we put in. So again, once we put in 5%, like over here, it would automatically calculate the units for us. And then we have our average fill price. Now the average fill price is our actual price where we bought it. So you see this line, blue line, this is where we bought the price, and that is 152.576. So yeah, this is exactly, that's like really close because we can't exactly go to that location. If we zoom in a lot, then we will be able to, but that's a waste of time. So this is where we bought our the USD, and this is the take profit. So again, this level, you see, 153 point something, that's the take profit, and our stop loss is 152 point that, so that's our stop loss. The last price is 152.58. So that is going to be the maximum price that our actual thing went to. So previously, this is where our price went up to compared to the so this is where our price is at, and what it does is it calculates this. So the average fill price minus the last price gives us the unrealized P&L. So P&L is profit or loss, whatever you like to call it. Unrealized, I don't know why they kept it, but yeah, it is unrealized profit and loss. Now the unrealized profit and loss gives us the estimate of how much, where are we standing in our trade. So right now, when we go to -5, we would lose the trade, and we are at -1.02. And now again, we went up to -0.3. And then again, we might go up. So again, we've gone up. So that is what explains us so you see now the price has gone above the line, and we are at the profit. And now again, it's going at loss. So the price is actually, it is real-time data which is being done. Now, this is the trade value. Again, this is related to the quantity, and again, the market value, and this is again related to quantity. Now, that is the thing. And if you go to orders, these are the orders which we are right now having. So you see, this is the one which we've just done. So we've made a market order with our stop loss set at this and our take profit set at this. And so these both are working right now. Now, let me go to this account and show you guys some of my 2 trades which I made. This is the first 2 trades which I made. So the first trade which I've taken, you see, let me go to my trading journal, or maybe history. Yep. So this is the first trade which I've placed. So I put a sell at this point, and I put my stop loss to take profit, and then I put a market, another thing. I don't know. Okay, this is kind of confusing because, yeah, okay. So here is our first sell in the market, and then this buy, and then the sell, and the buy. So actually, I've been just playing around that time. So I don't know if those are considered in this, but just talking about account history, there are 2 main trades which I've done. The first one was a huge loss, you see. Um, so this was minus 13.96 AUD. And then the other trade which we put in, that was a nice little profit. I think you guys could see that around here. Yeah, so this is the trade which I've been profited. So this was the trade. As you can see, this arrow indicates that we have done a sell. So I've taken a position about here and I did the sell around there. So that is this profit over here, 9.21. So well, I think I put in about so 9.21 divided by, let's do one thing, 9.21 divided by 0.93. So I put $9.9 into the trade, basically $10 you could say, and yeah, I made this much profit. The risk to reward ratio was pretty bad, but still, yeah. So that was the trade which was profited, and the trade which I've lost should be this one. Yeah, so this was the trade which I've lost. So actually the price was kind of going up, so I thought that this consolidation would happen and the price would go up. I thought the price would go low because you see this is like a really strong demand zone. You see a supply. Wait, was that a supply? Yeah, a really strong supply zone. So I thought it should go down, but I just decided to take a buy position anyways because in our weekly, daily, and 4 hours it was kind of going up. But then we were miserably wrong. So I had made a loss in this trade. So this is the trade which I've lost over here. But yeah, those are two trades which I've done, which I have recorded, but unfortunately I was not able to upload them. Well, that was because of my software kind of bugged out. But yeah, so well, here's my trade which I've currently done. So you see, the trade is kind of going on. The price is going up and down. And today is which day? I think it's Wednesday. Yeah, today is Wednesday. So yeah, well, I'm just gonna leave this trade for now. Let's hope that there's a profit because it was like the quickest analysis of all time. I just analyzed the chart real quick, just using the 5 minutes time frame and just put a trade. But yeah, so well, I can also end the trade, and you see there is a profit. So that's the profit which we just made. The price might have actually gone up. I'm going to leave this as it is because we can check in later if our trade was right. But yeah, so you see we've got a profit on our trading account. So one more important thing is that when you're actually doing the original, the 100% official, original, real money, when you put that into when you choose a broker and start trading with that, that is when it gets really, 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 really difficult. Because you see, the first thing is there is some kind of a surcharge or a commission fee which goes to the broker for help because they help us get involved with the markets, But yeah, so well, that is actually really important as well. But so yeah, that's it, guys, for today. I think we've done a lot. I've explained you what I've done. So I've just learned about the trading panel and actually putting in money and how what do all these things mean and all that stuff. And yeah, so, oh wait, actually, one more thing. I believe that realized means actually how much we have made after closing the trade. Unrealized is actually the one which is unrealized, obviously, which we don't know about. So the unrealized P&L is the unrealized profit and loss, which tells us that what is your profit and loss based on our current trades. So our trade over here is actually, you see, the trade is closed. So the trade is filled. The trade is filled. So the filled trade over here is what gets back to the realized P&L. The unrealized profit and loss is the profit and loss which is actually in real time. So once I take a trade and the price is going up and down, that is when the unrealized profit and loss comes in the picture. Okay, so what I'm going to do is I'm just going to put in $1. So one more thing, if I want to put in $1 as a risk, I don't need to give percentage. I can directly put the value, and again I have to choose the currency as well, which can be changed over here. So this currency can be changed from over. If I click on reset account, and I can change the currency to whatever I want. which I'm not right now, but yeah. So I'm gonna take a trade again. I'm gonna have our take profit over there, and our stop loss over there. Okay, so I just make a trade and left it. And you see, this is where our unrealized P&L comes in the picture. So the unrealized P&L again is our loss in real time. And once we end this trade, it would go and add up to the realized P&L, because you realize that how much you made or lost, but you've not realized it completely because the trade isn't filled yet. So yeah, well, that's it guys for today. It was a really nice, okay, let me just set this up. Okay, and increase that as well. All right, so again, yeah, that's it guys for today. Thank you so much for watching. And yeah, so well, again, if you have any more suggestions or anything like that which you'd like to tell me, I would really appreciate it. But yeah, that's it guys for today. Thank you so much for watching, and tomorrow we're gonna start off with our first, we're gonna create a new paper trading account. Over here we're gonna create a new account, and I'm gonna save that for later for our next video. But yeah, so we're gonna create a new account and start trading, and imagine and consider that as a real account and see how we would do. So that's it guys for today. Thank you so much for watching, and I'll see you in the next video tomorrow, where we're gonna start off with some more trading as I already mentioned. So thank you so much guys for watching, and I'll see you in the next one. Until then, stay safe and keep trading.